Okay, so if you're watching your portfolio drop and you're feeling that knot in your stomach, you are in exactly the right place. We're not here to tell you to panic. Instead, we're going to reframe that fear into something totally different. The price you pay for building real long-term wealth.
Yeah, the market's dropping, and maybe it's dropping fast. And that feeling, that panic, that little voice in your head screaming, sell everything and make it stop, it's starting to get louder. It's intense, it's real, and we're going to talk through it right now.
Look, that feeling is completely normal. It's just a natural human reaction to seeing red in your account. But here's the mental shift, the big idea we're going to explore today. That anxiety, it is not a warning sign that you've screwed up. It's just a price tag for being in the game.
So let's really dig into this idea of the price of admission. We're going to see why that stomach-churning feeling isn't a signal to run for the hills, but actually an expected part of the entire plan.
So what even is volatility, really? Well, here's what it's not. It's not a fine you pay for doing something wrong. Think of it more like the required fee for a ticket to long-term growth. It's kind of like a thunderstorm. It's unsettling while it's happening for sure, but it brings the rain that's absolutely essential for everything to grow later on.
The writer Morgan Housel just puts this perfectly. He says the amazing returns we all hope for from the stock market, they don't come for free. The price of admission is having to live with the uncertainty and those gut-wrenching drops. You simply have to pay the fee to get the reward. Let's break this down because this is so important. A fine is a punishment, right? It's unexpected and it makes you feel like you failed. But a fee is just the cost to get in the door. It's expected. And honestly, it signals an opportunity. When you can reframe market drops in your mind as a fee, not a fine, the whole experience changes. It's not a disaster, it's just the cost of doing business.
You know, think about it like this. A shop owner doesn't freak out every month when they have to pay their rent. It's a known cost of having a physical store. Well, volatility is the exact same thing for investing. It's the known, unavoidable cost you pay to get access to the market's long-term returns. Trying to get those returns without the volatility is like trying to run a store without paying rent. It's just not going to happen.
So, if volatility is the fee, how do we actually get comfortable paying it? The key, and it's always the key, is taking the long view. We have to zoom out from the scary day-to-day headlines and look at the much, much bigger picture.
And I know what you're thinking. Yeah, I get it, but this time feels different. That thought right there is probably the single most common and most dangerous thought in all of investing. I promise you, investors felt the exact same way during every single downturn in history. It's a universal feeling, not some special insight into the market.
And history proves this out time and time again. The dot-com bust, the 2008 financial crisis, the COVID crash in 2020, every one of them felt like the world was ending. And what happened after every single one? The market recovered and it eventually soared to new all-time highs. Recovery isn't some rare miracle. Historically, it's just the norm.
And here's why that long view was so powerful. If you look at the market in any single year, it's chaotic. It's a totally unpredictable beast. But look what happens when you just stretch out your timeline. Over 5 years, the returns are mostly positive. And over 10 years, they become overwhelmingly positive. Time is the ultimate antidote to volatility.
So what does this mean in, actual dollars and cents? Well, it means everything. Imagine, investor A feels the fear but does nothing and stays put. Investor B sells in a total panic. The big problem is panic forces you to sell low, and then you have to make the impossible choice of when to get back in, which is almost always higher. You lock in your losses and miss the best days of the recovery. Over the long run, the difference in what your money becomes isn't small, it is absolutely life-changing. The real cost isn't the volatility, it's the panic.
And this all leads to a really freeing realization. Your job isn't to outsmart the market. It isn't to predict the next crash. Nope, your only job is to master your own behavior. That's the one and only thing you can actually control in this whole process.
And it really comes down to two different mindsets. On one hand, you've got the speculator. They're on an emotional roller coaster, trying to time everything, reacting to every scary headline. But on the other hand, you have the investor. The investor is like a gardener. They know that their greatest tool is time in the market, not timing the market. They have a plan, and they just patiently stick with it.
Building that investor mindset, it definitely takes discipline. But don't think of discipline as a punishment. Think of it like a muscle. Every single day you stick to your plan during a downturn, that's like doing a rep at the gym. It's hard in the moment, for sure,
but you are actively making your financial future stronger.
Okay, so let's make this super practical. We're going to end with something we're calling an investor's pledge. This isn't just a list of tips. This is a promise that you're making right now to your future self.
Here are 3 simple, calming actions you can take right now. First, stop checking your portfolio every day. Just stop. Your plan is for years, not hours. Second, review your why. Go back and remember the big, long-term goals you're investing for in the first place. And third, switch your mindset. Think like a buyer. You're not a victim of the market. You're an opportunist who's seeing great companies on sale.
And this is the heart of the pledge. I want you to really let this sink in. Maybe even say it out loud. I accept that volatility is the fee I pay for my future wealth. I will not let today's fear cheat my future self. Make that your mantra for the tough days.
Because this is what it all comes down to. The investing game isn't won by some brilliant act of timing. It's won by patience. Your greatest power isn't knowing everything about the market, it's time. So, pay the fee, stay the course, and give your future self the incredible gift of your resolve today.